Welcome back, and you're still tuned into Market Fatafat on ET Now. This is a show where we discuss all the stocks that are buzzing in trade today. Nifty now, in fact, is in the green. It is up nearly 12 points as we speak to trade near that 24,600 mark. Nifty Bank, though, is underperforming in trade, down 0.5% as we speak. 55,250 is where it is currently trading. But first up, let's put the spotlight on Apollo Hospitals then, and all eyes will be on the company as it is set to report its numbers later today, where consolidated revenue is expected to come in at 5,740 odd crores, which will be an uptick of nearly 13% on a year-on-year basis. And for Apollo Hospitals this time around, margins are expected at 14% versus 13.3% that the company reported same time last year. Growth is expected to be supported by growth across business verticals. Hospital revenue growth expected at 11%. Occupancy, meanwhile, is expected to come in at 65%. And average revenue per operating bed, that one could rise by about 8% on a year-on-year basis. Any kind of management commentary with respect to margin improvement going forward and progress on adding doctor teams at new hospitals in Pune, Kolkata and several other regions will be also crucial this time around. But yes, ahead of its numbers, the stock is holding on to some marginal gains. The 3-month chart suggests a 5% uptick. 7281 is where the stock is currently trading.
Right, Apollo Hospitals in trade right before it reports Q1 numbers. That one's trading with gains of 0.2% right now. But Akshay, hi, thank you so much for joining us. You picked out Apollo Hospitals for the chart on the charts as well. Tell us, what do you see in the charts? Because as far as fundamentals are concerned, a lot of analysts are looking towards the healthcare sector, especially, Apollo Hospital is one of the consensus calls. It's a domestically facing area. But on the charts, what does Apollo Hospital suggest?
Good afternoon to all. Yes, quarterly result numbers are just a few hours away. And if you look at the charts, one round of correction has already matured. I think the level of 7050 is a possible short-term base which the stock has confirmed. And possibly looking at the way the price setup is and the derivatives data setup is, the chances of the stock rebounding after the last couple of months of correction look high. So with the support of 7050, if the bounce back matures in expected lines, we can look forward for targets till 7550.
All right, so those are the targets to watch out for on Apollo Hospitals. Let's move on to the next counter that is in focus, and that's Ashok Buildcon. As of now, it is sitting at the day's lowest point, decline of 0.8% coming in. But as far as the numbers are concerned, the net profit is up almost 45% on a year-on-year basis. However, the revenue is down 23.5% on a year-on-year basis at 1,887 crores. The EBITDA is also seeing EBITDA is also very flat actually at 598 crores versus the same EBITDA that we saw coming in last year as well. The margins, however, are up 743 bits on a year-on-year basis at 31.7% versus 24.3% on a year-on-year basis. But Ashok Buildcon currently is reeling under selling pressure at the lowest point of the day, trading with cuts of 0.9%.
Okay, so the stock is trading with cuts of nearly 0.9% as we speak. That's Ashok Buildcon for you. But let's also put the spotlight on Glenmark Pharma then. And Akshay, you've picked up this stock. The stock is trading at the highest point of the day, 2071, where the stock is. On the charts, where do you see the stock headed?
Yes, so if you look at today's day trading action, pharma and healthcare space is noting strong momentum pickup. Glenmark Pharma, a few trading sessions back, saw a very strong gap up, and I believe in the last 3 weeks of slight dip which we got, a consolidation phase, the momentum should regain, and this is one of the best placed charts in the pharma pack. Going by the momentum reading. So somewhere 2000 is a short-term base which is shaping up, and a recovery of matures on the expected lines can see this pharma stock moving once again to its recent swing highs of around 2275.
All right, moving on then to the next counter that is in focus. Kanishka, you picked out JSW Steel for us. Tell us why have you picked out JSW Steel and why is the counter in focus?
That's right. So JSW Steel is in focus because the Supreme Court has reserved its verdict on multiple pleas tied to that 19,700 crore rupees resolution plan for debt-ridden Bhushan Power and Steel. Now, as many as 5 pleas were heard afresh yesterday after the CJI-led bench, on July 31st, recalled its May 2nd verdict that had directed liquidation of BPSL and set aside JSW's resolution plan, criticizing the conduct of the COC, the resolution professional, and the NCLT for what it termed as a flagrant violation of the IBC code. Now, one of the key issues that was, was whether the 3,569 crore rupees in EBITDA and 2,500 crore in delay-related interest generated during this resolution period should go to the creditors or remain with the company. JSW has argued that it bid on as is and where is basis, and that delays were due to ED asset attachments lifted only in December 2024. The outcome now will determine key financial liabilities and the fate of the acquisition. So all eyes are on the verdict now, and that's why the stock is in focus, currently trading about 0.5% lower.
JSW Steel in focus. On the back of this, the stock is down 0.4%. But another stock that is in focus this afternoon is NTPC. Akshay, the stock is up 1.4% as we speak, 340. Where do you see the stock headed? 400 on the anvil, is it?
Yeah, if you look at the price volume action for NTPC, I think it's been 3 to 4 months that the stock has been confined in a very tight trading range. So I believe it is at a cusp of a possible price breakout, and I believe the breakout or chances moving up are higher looking at the price setup. So with the price of 340, the stock possibly looks under accumulation as I look at the price volume action, and the possible upside or a breakout, if matures on expected lines, can see the stock moving for potential targets of 375 to 390.
75 to 390, that's the target for NTPC. But let's also put the spotlight on Nippon AMC. Motilal Oswal has come out with a report where they are maintaining their buy stance on the stock. They've marginally lowered their target price to 930 versus 940 earlier. Motilal Oswal says that the company and the growth prospects are fueled by strong AUM growth. It is a leading SIP franchise. ETF market leadership is sustainable. SIP scale up and steady growth in alternative and offshore segments will aid growth for the company going forward. It also says that it is the fastest growing AMC with steady SIP flows and ETF dominance, and they expect 14% revenue CAGR and 15 and 16% EBITDA and PAT CAGR over the next few years. They are reiterating their buy stance. 930 is the target price. Nippon AMC in focus, although it is absolutely flat as we speak, and it has given up all of those gains.
All right, that's Nippon Life, that's in focus. But NTPC also, Akshay, you picked out for us. That is also trading up 1.3% in trade right now. Tell us, what do you see on the charts for this counter? Because it has been correcting over the last one odd month. But Akshay, we'll come to you on for that NTPC, but you've also picked out Ultratech. We want your view on Ultratech first. What do you see on the charts for Ultratech?
Yeah. So Ultratech Cement is another chart which has a very positive momentum pickup in the last couple of days. If you look at the broader setup on the weekly charts, this stock had given a price breakout 6-7 weeks back at the levels of 12,200. Last 3 weeks of slight corrective action in the stock has seen a revisit of the supports, the breakout zones, and again a reversal from the 12,200 mark. So 12,200 derives special importance. It is a new support which is building in, and the momentum which has kicked off in the last couple of days should possibly target around 13,000 on a short-term trading perspective. So it's a buy with a possible upside till 13,000 on short-term trading parameters.
All right, moving on then to the next counter that is in focus today, and that is Titagarh Rail. If you look at the numbers, then Titagarh Rail, we do see, as far as the net profits are concerned, that is down 54% on a year-on-year basis at 30 odd crores. The PAT is seeing a downtick. The revenue is down 25%, at 679 odd crores, and the EBITDA is also down 26% at 75 crores. The margins, however, are at 11.1% versus 11.3% on a year-on-year basis. But a sharp knock coming in as far as the net profit is concerned, and the back of that, 0.5% cut coming in on Titagarh Rail.
Okay, so that's Titagarh Rail for you. Weak set of numbers. The stock is down 0.5% as we speak. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade. And let's get going. And let's now put the spotlight on a whole host of sugar stocks that are in focus. EID Parry, Balrampur Chini, and the entire sector is in focus today. Kanishka, on the back of some commentary that came in with respect to ethanol and exports, isn't it?
Absolutely. Stocks, just like you pointed out, like EID Parry and Balrampur Chini, they're all in focus today after the Food Ministry said it's working on a policy to produce ethanol from sweet sorghum and is considering higher broken rice allocation for ethanol. Now, the government will review sugar exports only after meeting domestic ethanol blending needs and plans to divert 4 to 5 million tons of sugar for ethanol production next season. So that's the word coming from the Food Ministry, and that's why these sugar stocks are in focus today.
All right, sugar stocks in focus on the back of that news flow. But let's come to you then, Akshay. You picked up TCS for us. Now, TCS has been, correcting for a while. In fact, the entire IT pack has been facing headwinds on the back of global macros. But on the charts, why have you picked out TCS for us?
Yeah, so I agree. IT has been a major laggard in recent times. Even post the Q1 numbers, majority of the IT names have been hard hit post the results. But if you look at the chart or the price placement of where TCS is, it is currently very heavily oversold. It is trading at one of the key support zones of roughly around 3,000. If you recollect, in somewhere around June, July 2022, this was the bottom from where we had a very significant recovery in TCS all the way till 4,400. So in all probabilities, at the current rate of 3,047 where TCS trades, the chances of a trading pullback looks pretty high. And if it recovers on the expected lines, you can look forward for a trading pullback till around 3,200 or 3,250. So we are taking this or recommending TCS for a trading pullback kind of a scenario with a strict stop loss of around 2,950 for potential targets of 3,250.
250, that's the level that we are watching out for as far as this IT major TCS is concerned. But let's also put the spotlight on the auto and auto ancillary sector then. Minda Corp, that one will be reporting its numbers later today, and ahead of its numbers, the stock in fact is sitting with a cut. Although it is in fact gaining nearly 3% as we speak ahead of its numbers. Results are set to be announced today, and remember last quarter it reported a revenue of about 1321 crores with margins coming in at 12%, and we had net profit that came in at 52%. All eyes will be on management commentary with respect to what the outlook is going forward, new launches and product launches that are lined up. So yes, ahead of its numbers, the stock is gaining nearly 3% in trade today.
All right, that's Minda Corp. But coming to you, Kanishka, Muthoot Microfin, that one's posted its Q1 numbers. Take us through the fine print of the numbers then.
That's right. So Muthoot Microfin is in focus today after reporting a very steep drop in Q1 FY26 earnings. Net profit that has fallen nearly 95% year-on-year to 6 crore rupees with net interest income that declined 16.8%, with net interest margin contracting 180 bips to 11.5%. Asset quality also weakened. GNPA rose to 4.85% from 2.1% earlier, while credit costs they stood at 4.3%. However, the management has said that higher operating expenses were due to prioritizing collections with benefits of strategic initiatives expected in the second half of the fiscal. The company has also entered Northeast India with its first branch in Assam, while CRISIL reaffirmed its A+ stable rating for the company. Now, the CEO has flagged sectoral challenges and tighter MFIN guardrails as reasons for slower disbursements and a focus on portfolio quality over aggressive growth. That's the word coming from the company CEO, and that's why the stock is in focus. However, trading about 2.5% lower as we speak.
All right, that's Muthoot Microfin on the back of Q1 results. Weak set coming in there. But the next candidate on the radar is BEML that posted its Q1 numbers, but now it had come out with its number yesterday. Antique has now come out with a report where they have cut the target price to 4,921 versus an earlier 5,200, and they're still maintaining a buy call. They feel that this was an operationally subdued quarter, and they expected to deliver strong operational performance over FY25-28 estimate, supported by execution of the Vande Bharat order and gaining momentum of the Metro order execution. Now, they also project a 16% revenue CAGR over FY25-28 estimate, while earning is expected to reported 32% CAGR over the same period. Now, they have trimmed their FY26 and 27 estimates by 7 and 13% respectively. Factor in back-end delivery schedule of rail and metro, and they value the company at 34x its first half FY28 estimated EPS. So on the back of that, they have cut the target price, but they're maintaining a buy call on BEML. But BEML is right now declining in trade with cuts of 0.3%.
Okay, so that's BEML for you, down in trade. But Maruti Suzuki, Akshay, you've picked up this counter for us. The stock is gaining nearly 2% in trade today. Tell us, what will your target price be for this auto major?
Yeah, so if you look at the stock Maruti, the price action really has been confined in a trading range 12,200. That's the base end of the range in the last couple of months. And today you have a strong momentum surge on an intraday front, and the stock re-attempting an upside breakout of the level of 13,100 zone. So the way the prices are setting up, this area of 13,000 breakout should potentially see the stock revisiting its all-time high levels near 13,500. So initially we are keeping targets till 13,500 in Maruti from a short-term trading front. A positive price setup, 12,400 is the possible base, which is the stock is set up for a short term, and looking forward soon that targets of 13,500, which is almost near the all-time high, should be set in Maruti.
All right, so that's Maruti Suzuki for you. But Kanishka, CG Power, tell us what is the news for here?
That's right. So CG Power is in focus today after its US step-down subsidiary CGDE Sub that has announced an agreement with Flanders Electric Motor Service to expand its presence in the US railway sector. Now, this partnership will leverage Flanders' local capabilities and CG's global expertise to offer faster, cost-effective and high-quality railway traction motor replacements and refurbishments in a market with a 140,000-mile rail network. Now, the management says that the move positions CG Power to capture significant growth opportunities in North America, enhance customer service standards and reinforce its leadership in railway segments, railway solution segments, and that's why the stock is in focus today. However, despite that positive news flow, the stock continues to trade lower, trading about 1% lower at this point.
All right, that was the last stock of the show. Kanishka and Akshay, thank you so much for taking the time out and joining us with all the buzzers in trade. But as we now await the inflation data numbers that will be released today, let's go across to my colleague Varun to take a check of what the polls are indicated on the same.
Well, so the Reuters polls actually expects the CPI number to come at around 1.76%, and this would be the 9th straight month where we are seeing a decline in the CPI number, and in fact a 6th straight month where we are seeing the CPI number below the overall tolerance level of RBI, that is around 4%. And this time the CPI numbers are expected to fall below the 2% mark, that is around 1.76%. If you look at the overall numbers, it is the food inflation that is going to impact the overall CPI number, because it's the vegetable inflation which is on a declining trend, and that would impact the overall CPI number. Also, if you look at the rural and urban CPI number, they have been on a declining trend, and we are expecting them to decline in this month also, that is in the month of July as well, and that will impact the overall CPI numbers for the month of July. Also, if you look at the core CPI number, they are expected to moderate to around 4.22% in the month of July. So overall, if you look, the CPI numbers are expected to decline for a 9th straight month, and they are expected to come at around 8 years low, that is around 1.76%.
Okay, so that's as far as CPI estimate is concerned. The data will be out at 4 p.m. today. But Sonal Verma, Managing Director and Chief Economist at Nomura, discusses how they expect both retail and core inflation to shape up for India in the month of July. Remember that this data is expected to come out late evening today. Listen in to what she had to say on what they expect.
Headline CPI, we're expecting a moderation to 1.3% from 2.1%. So actually going below the RBI's 2 to 6% tolerance band. And we think it will be driven by a combination of both food inflation getting into a deeper deflationary territory, plus a moderation in core inflation. So core, if you recall, had popped up to 4.5% in June. That was partly because of the impact of gold prices, some of which has reversed. So we are also expecting core inflation to moderate to 4% from 4.5%. While tariffs are, inflationary in the US, they are actually disinflationary in rest of the world, including in India. partly because of this tariff impact and what it does to China's overcapacity and some of that hitting other shores. So it is important, but I think for India, we think disinflation is going to be the big theme.
All right, let's also put the spotlight on Hindalco. It has just reported its numbers. Remember, Novelis had already reported its numbers yesterday, and that contributes nearly 70% of its revenue. So we have standalone numbers flashing for you on your screens. Revenues at 24,264 crores, which is a downtick of a marginal 3.5% on a sequential basis. Now remember, aluminium prices had fallen on a sequential basis, and that is weighing heavy on the revenue figure this time around. Margins have come in at 12.9% versus 11.9% that the company had reported in the previous quarter, an uptick of about 100 basis points. EBITDA has also seen an uptick of about 5% QOQ, and PAT, that one has risen by about 19% on a sequential basis. But as I mentioned, nearly 70% business comes in from Novelis. The numbers were already reported, and hence we are not seeing any kind of reaction on the stock at the moment. Margins at 12.9%, revenues down 3.5% on account of lower aluminium prices in the quarter gone by, so largely on expected lines. Now remember, Novelis had come out with its numbers yesterday, and that was also a mixed set. Revenue was ahead of what the street was working with, but EBITDA per ton, that one came in at about $432 per ton versus $450 that the street was working with. No major impact on the stock per se, because this does not contribute a major chunk to its revenue. Although the stock has seen slight bit of uptake over the last few minutes, but it is trading absolutely flat at the moment. You can see the figures on your screen. 24,262, that's the revenue figure, a downtick of about 3.5%. As compared to estimates, as also there are no complaints. It is in fact better than what the street was working with, and margins at 12.9% versus 11.9% that the company had reported in the previous quarter. We'll also try and connect to an analyst to understand what these numbers look like, but all eyes will of course be on management commentary. Remember, the con call is scheduled to happen at 4:30, so all eyes will be on that. But that's all the time we have on this edition of the show. Don't go anywhere. Closing trades coming up next.